Hey, what's going on, guys? This is Terrence Ray, and I'm back at you with another stock market update. Calling this the daily setup. We're gonna see if we can do reoccurring streams in the morning before the market opens to kind of get you guys set up for the day. So, without further ado, let's go over what's going on in the market right now. Even though um my green screen ain't working for whatever reason. You actually see the green down in the corner. That's all right. Right now we got the S&P 500 is down. The spools is down 34 handles. I'm looking right over here. That's a little over half a percent. We got the Nasdaq futures are down about 200 handles. That's almost a whole percent. So they're outperforming to the downside. We got the Dow futures down 170 handles. That's almost half a percent. And the Russell is lagging. Excuse me. So meaning it's just not down as much as the other major indices. It's only down about two handles, which leads me to believe that we may not see any more further down movement, but we'll go over that. Bitcoin is let's take a look at Bitcoin chart wise. Anyway, Bitcoin has been going crazy ever since. Now I've been on the past few weeks on the weekend video where I go over the setups. You can see I had this little channel here and I've been talking about it. Once it gets here, breaks out, and just look, the past 2 weeks, here we go. So we're right up here. Now I do have some ranges as far as some Fibonacci extension levels go. So the next range is up here right around 95,000. And then if we break through there, 108 is the next level. And then we even got 117 in our sights. So we're just holding on for the ride in Bitcoin. Let's look at the oil futures. Now, oil futures have turned over. Now I'm looking at a weekly chart. So each candlestick represents a week. But we can see that the oil futures have rolled over. Excuse me, not oil, I mean gold. So we got two big red candlesticks right here after this nice doji during that week. See right there. So you got gold actually coming down to a support level though. So let's highlight that. Now this is on the weekly, so I'm gonna take a look at the daily and see what it looks like. But this would be support right here. And all I'm looking at right here is this level, basically where it went up, pulled back, basically flagged. And then you got a big green candle and it continued higher. So right in here, where it pulled back, this level right in here would be some type of support. So let's go look at the daily and see what it look like. Might have to tighten it up some. And here you can see you got an area of consolidation where it went sideways for a few days. Well, I would say maybe that's probably about what, about 10 to 20 days right in here. And so here, look at this candlestick right here. So we may have found a little level of gold. Maybe it'll pull back a little bit, but I think it can go down a little bit more. So that's for anybody that is trading or looking to trade gold. That's what you're looking at. This may not be a bad place to come in and do to put on like a bullish setup or something like that. Let's see. And I see people, they wait till I go live to start sending text messages. Let's go. Let's see. I got gold. Let's take a look at oil. Oil futures got a little chop. Look like it's just going sideways. So you can see oil just going to the side. If you trade oil, if I wasn't trading oil futures or anything like that, dang, I wish I would have seen this up here. Look at this head and shoulders, nice head and shoulders right here. Boom, just turned. That was the signal, that it was going down. and now you're just kind of chopping, going sideways. Need to see some type of chart pattern, form something like a bull flag or something like that to get it to go higher. But me personally, I don't see anything in oil. Now you don't have to be directional. If you're in the options, may not be. You got a nice IV. You got an IV rank of 39, so it's not like you can't sell some puts, sell some putties. In here. Let's go look at. Let's look at the bonds. We got bonds. We got the bonds are red on the day. So you can see, let's look, got them down here chopping. So with today being a Friday, let's see if this candlestick holds right here. That would give you a nice harami pattern down at the bottom. You all know that's my favorite candlestick pattern. That and the falling three. You don't see the falling three perfectly set up like you do haramis. That's a nice harami right there. So if this holds, I'm willing to bet that if we get a hold like this on the bond on the 30-year, that this may signal a bottom. Either we'll get some chop and then we'll start turning. I probably would not trade these are futures. So more than likely if I got something like that here, let's look at the 10-year note, then I'm gonna show you what I would trade. 10-year note similar. It's not as perfect, but you got the candlestick down here, and you got this look like it's forming a doji, but it's similar. So I will more than likely come to the TLT and look at it, and then let's see what kind of candlestick pattern it gets today. Because this is where more than likely, if it was me, where I would trade, if I would look to take advantage of the bonds. You got a 43 IV rank. So I'll watch this towards the end of the day to see what we get. And also, now I'm doing this just looking at naked charts, but once I bring my indicators up, then I can see, what things are looking like as far as yeah, I'm messing around with something new. So if you guys are looking at the screen, you might see some numbers on here. It's something called the TD. It's called a TD sequential indicator. And basically, it's counting the candlesticks like from the move, like when you get a move or at the beginning of one, and it counts them up to nine. And so it's just something I've been messing with, right? Um, and I'll go over a trade I put on yesterday using this, something that I had been watching anyway. But now let's go look at, but so you could either a couple ways to play the bonds with TLT. Generally, my rule is a lot of times I'll wait so it breaks either above or below the 9-day moving average. I need to change these colors, but normally this line right here is purple, but I got it gold right now. But this is a 9-day simple moving average. So generally, I like to wait until it gaps up over it and then get long. That's waiting to get some type of confirmation. But since it's already down here, if I'd go back to the ZB, the 30-year, if that Harami holds, then I definitely think about getting long the bonds down here with a probably like an option play, selling a put spread or something like that. We got above 30 on the IV rank, so that's something that I would do. Let's look at. Let's go to Meta. On Meta, we got now Meta. I did put a trade on like when it got right here when it took out this high, and then it just never when it came back down, I sold out of it and took the loss, took the L. But right here, you can see you can see that it went up and hit this level to 61.8 and then it just drifted down. So ideally I'm not looking to do anything here. If you look down here on my Now at the bottom, this is like the squeeze indicator. You can see I got red dots down here. So that's letting me know it's in a range, right? The market is compressed. So I will wait for it to signal to break out of here before I do anything else with Meta. I just sit here and just watch it do whatever it's gonna do, go sideways. What I did want to talk about, we'll take a look at Tesla. Tesla had that furious move to the upside coming out of the election. And then you could see, it broke out, uh, gapping up, gap higher here, went all the way up to the 1618, went over it. And then you can see, like yesterday, now here was the Wednesday and Thursday, this body or this candlestick inside of this body. And then you got a big down move down right here. So today, here's the 9-day right here. So generally, you will see some type of hold up right here at the 9-day moving average. So we'll see what happens when it gets here. If it continues to go lower, I am looking for to play Tesla to the upside. So we'll see if we do get something. Maybe it'll slow down and then turn a little bit. I don't think we'll get that today. We'll probably get some either more downward to sideways action in Tesla, but we'll see. We will see. Let's look at, I'll show you guys. I put a position on yesterday in the SPY. Sold a call spread right here. And this was the first candlestick that it gave me after this doji right here to the downside. And then it gave me like a one. Let's see if you guys can see. I can put it where you can see it on that little sequential indicator. Put a one right here under this candlestick. And right towards the end of the day, when I was looking at it, I was like, okay, I'll try it out and see what happens. And then I sold a call spread. I'll show you guys where I'm at. Sold right here, 609, bought the 614, and here we go. I'm right out here wrapped around the expected move. I'm 35 days out. It was 36 yesterday. I think this delta yesterday was right around the 24 delta, 25, something like that. And I just needed to go down, maybe, and it'll open up down and in the money. So we'll see how much it's worth. I'm just looking to keep half of it, make a little trade, and then a little profit, and then get out, move on to the next one. All right. Now I'm gonna take this time before to wrap up this video. I'm gonna go ahead and talk about. I got a couple guys I work with, um, a couple buddies, and I've been getting people. So I guess options is the new in thing now, and everyone wants to learn options, right? And so I'm gonna start like a little beginner class, and then I'm just gonna roll through little different topics every day to hit. So let's talk options. Now, the definition of a call and a put, you can Google and look up yourself. Going over the definition of it to me won't help you trade, right? What I'm going to do is I'm going to give you I'm going to I'm going to tell you how it applies to trading. So then that way you'll be able to you'll understand what's going on or what I'm saying, when I use certain terms, and you'll understand it yourself. So let's go over that. Basically, you want to come to the option chain. This is the option chain. When you come to an option chain, now this is Tasty Trade. I advise everyone to use Tasty Trade. I think it's the best platform out there. A link to the platform is in the show notes. Click on the link and put some money in. I think once you put in $2,500, if I'm not mistaken, then they'll send me something, right? But at least you don't have to pay me. All right. Now I'm gonna pull up. I am in the SPY, which is the ETF of the S&P 500. Now I am going to go to, when you're looking at this screen, now I'm talking about in reference to Tasty Trade, where you see these W's, these are weekly options, meaning and they have expiration dates. Like in the middle, you'll see like a number, right? What right under here where it says strike, you got 0 day. That means that that option contract expires today. So the market's gonna open, bell will ring at 9:30. These options will will go live, and then you can buy, sell, and whatever on this chain. But that means that whatever you do on this day, these options expire today. Now, if I click on this one, see it says 3 days. That means that these options you have 3 days, and so on. After that, 4 days. That's letting you know when they expire. Now, when you look, you go all the way down. Now, this one says 35 days, right? This expires in 35 days. So that's how much time you have to be right or wrong on whatever option you decide. Now, that's the basics of the option chain. Now, for the most part, that's how. Now, I'm just dealing with stocks and ETFs. The options for now, if I go to the SPX, if you come into the chain on a SPX or anywhere and you see AM, right? This means that these options will expire the morning before. So this one says 34 days. I think 34 days will put this on a Thursday, if I'm not mistaken. These options will expire on the morning. So it'll be the morning. So this one will be Friday, like the 35 days, like on the spot. This one is 34 the day before. But you won't be able to trade these on that morning. These will expire on Wednesday, after Wednesday close. That's why I got an AM settlement on it. So it's not like you'll be able to trade them that morning. No, they will have expired on that morning. So my biggest advice to people who don't want to deal with those type of settlements is don't trade those, right? Or keep that in mind that you won't be able to. They are more liquid. However, you won't be able to, instead of like this one right here doesn't have AM. See, this one says 34 and it's a weekly, right? So this one would expire on that Thursday. So you could trade through that Thursday on this one. But then this one says AM settlement. So this one would close. You would not be able to trade this one on that day. So therefore, I would not, I don't generally trade those. I don't hold those options that long anyway. So the way that I trade, I'm out of it way before then. So that never plays into it. But I'm just letting you know. But when you see AM settlements, those are different settlements. And that's what they call option contracts when they expire. So these have different settlement types. I hope that makes sense. That's something that basic that if you want to, all you got to do is Google AM settlement and options and then read it, right? I'm just going over bare minimum stuff to get you in the door. Now I'm going to talk about what is a call and what is a put. Let's go back to SPY. Let's go right back to, we're going to use today, the options that expire today. Now, over here on the left, we got calls. On the side over here on the right, we got puts. I had a guy that was talking to me, and he said, well, puts mean they go down, calls mean they go up. That's incorrect because you can, if you buy a call, what you would come over here where it says ask. Now on the Tasty Trade platform, right up here, it says buy right next to ask. It's showing you like, hey, if I click this link right here, right, I'm buying this call. Like you click over here on this side, like let's see, I'm just gonna click right here. See how it light up green? It says B1. That means I'm buying this call for, you look down here at this price, 131. That's $131. That means that I'm buying a call thinking that this market is going to go up today. Now, if you wanted to sell this call, you would come over here and then click sell. Now you would say, well, why would I sell? Now, I don't advocate selling in the money options on the day of expiration. No, I'm just doing this for the sake of teaching you what selling a call means. If you sell this call, which you would come over here and click on the bid and click sell, that means you are selling a call thinking that the market will go down. You're taking a bet that the market will go down and you're collecting premium of 130. And if the market, let's say the market does go down, let's say the market goes down a little bit, you'll see. So a lot of times people will say, I'm selling something, but I don't have it. I don't own it. How can I sell something? Don't think about it like that. Throw that out of your head. You can come in here and sell it. Just all you need to know. So if you sell this call right here, you're gonna have 130. You're gonna collect 130 in premium. You want the market to stay below wherever you sold it. You want it to go from 593. You want it to go right now. It's at 589. So it's gonna open lower than here. The market hasn't opened. So these are gonna change when the market opens. But I'm just saying, for the sake of this, you want the market to go lower when you sell a call. And then you buy it back for a cheaper price. So you sell it for 130, market goes down, and maybe the call is only worth, let's just say 60 cent. You buy it back for 60, keep the other 70%. Now, if you sell it to open it, that means you have to buy it back to close it. Same thing if you were, clear this out. If I bought this call, I want the market to go up. Now that means I want the value of my option to increase by going up. So if I buy this call and it goes up, and now let's say it was 130 when I bought it, and now it's worth like $2, I sell it back for $2, and I that means I made 70 cents or $70. Put side, same
Power
thing.
on.
We come
Audio
over here.
muted.
That was my my speaker came on. All right, let's go back to, I was talking about puts. Now, if you were to buy put, right? If you buy a put, you want the market to go down. If the market goes down, it's just like that call you bought, except for you want the market to go down. When you buy an option, you want the value to increase. So buying this put, the market goes down. That means if I buy this put for 180, let's just call it 190, and then the market goes down, and now the put is not, the value of the put will go up. It means I bought it for 190. Now it's worth 300 bucks, let's say 315. I sell it back. That means I'll make a 125 in profit. That's $125. If I think the market is going to go up, I can sell a put. I would come over here. So instead of clicking on the ask to buy, I would sell the put. So if I sold this put, you probably wouldn't, you probably would sell a put like maybe out here somewhere, but it doesn't matter. I'm just showing you, if you sell a put, say you sell it for $1, you take in $1, the market goes up. Because if you sell a put, you're betting on the market going up. You sell a put, you take $1, the market goes up. That means the value of the put will decrease. You want it to decrease because you took in the in premium. The market went up. The value of the option decreased from $1 to 50 cents. Then you buy it back and keep the 50 cents. That's that. So you can do either on either, you can sell puts and buy puts. You can buy calls and sell calls. You can make you a little diagram, keep it in your head. Once you get into this on a regular basis, you will understand it. And you just got to remember you can do both on either side, right? The only difference is you're going to say, why would somebody want to sell a call or sell a put, right? We're going to talk about that in the next video. But right now, I just want you guys to understand that you can do both on both sides. You can buy and sell puts, you can buy and sell calls. If you buy a call, you want the market to go up. If you sell a call, you want the market to go down. If you buy a put, you want the market to go down. If you sell a put, You want the market to go up. And if you sell options, you collect premium. If you buy options, you pay the premium up front. And that's pretty much easy. Most people, when they first get into options, they just deal with the buy side. So, you know, and that keeps it simple for them. So they buy calls, betting on the market going up, and they buy puts, betting on the market to go down, and they just keep it simple like that. And if you want to keep it that simple, you can. That makes it real easy for you, right? And then, so the next video that I do, I'm going to get into selling options a little bit more and the nuance of it. And we'll talk about selling calls and selling puts. And then, and hopefully that'll make it a little easier for you guys. And then we'll do the advantages of selling, and the disadvantages of selling, and the advantages of buying and the disadvantages of buying. Because when you buy options, you need to be right directionally. When you sell them, you don't have to be right directionally, if that makes any sense. And I'll get into that a little bit more in the next video. So, hey guys, if you got something out of this, hit the like button, hit the subscribe button, um, share the video, and sign up with Tasty Trade through this link. This is the easiest platform to learn on, hands down. Like the stuff I was showing you, I'm just clicking. I want to buy a call. I just click it and then pull up all this stuff down here. It ain't like that on a lot of other platforms. You got to hold this down and then click this. And I'm just telling you. So, with that being said, I'm about to get ready for the opening bell. I'm gonna try to do these daily setups pretty regular. Try to do them right around 9 before the market opens up, so you'll get your opportunity to come in here live if you want and ask some questions, and then I can go through some of this stuff. Maybe go through some trades that you got. And with that being said, guys, I'm out. Peace.